Stop! Look at this house. You think you can buy it in 2025? You are wrong. The system? It has been rigged against you. The American dream didn't just die of natural causes. It was murdered. In cold blood. For 70 years, the deal was simple. Work hard, save your money, buy a home, and retire rich. But in late 2025, that deal is broken while you are struggling to pay rent. Wall Street is buying entire neighborhoods with cash. They don't want you to own anything. They want you to rent from them forever. If you want to survive the economic collapse that the news isn't telling you about, you need to subscribe to the Ledger. Right now. We expose the white-collar crimes and the financial traps designed to keep you poor. Don't let them control your future. Click subscribe, join the resistance. And let's look at the data. An ease. Welcome to the 2025 housing trap. To understand the crime, you have to look at the weapon. The weapon? It's math. Let's look at the cold, hard reality of the economy right now. The Federal Reserve. They told us they would fix inflation. They raised rates faster than at any time in history. They promised us that housing prices would cool down. But look at the numbers. Prices are hovering near all-time highs. Why? It is called the lock-in effect. Imagine, you bought a house 5 years ago. You have a 3% mortgage rate. It's beautiful. It's cheap. It's an asset. But today, the rate is double that, maybe triple. If you sell your house now, you lose that 3% rate forever. You have to buy a new house at 7% or 8%. Your monthly payment would double for the same size house. So, what do millions of Americans do? They stay put. They don't sell. They are trapped in their golden handcuffs. This has created a massive supply crisis. There are no houses for sale. Inventory is frozen solid. And in Economics 101, when supply is zero, demand drives prices into the stratosphere. This is why, even with high rates, prices aren't crashing for you. But this is only the first layer of the trap. The economy in 2025 is showing quiet cracks. GDP growth is slow, hovering around 1.9%. But inflation? It is sticky. It is stuck near 3%. This means the Federal Reserve cannot lower rates back to zero to save you. If they lower rates, inflation explodes. If they keep rates high, you can't afford a mortgage. You are caught in a deadly pincer maneuver. Now, let's introduce the villain of this story. While you are struggling to get a bank loan approval, someone else is buying with cash. Wall Street. Firms like BlackRock, Vanguard, State Street, and massive private equity giants. They noticed something important after the 2008 crash. They realized that owning debt is risky, but owning the asset, the land itself, that is power. In 2025, we are seeing the rise of the build-to-rent revolution. Drive through a new subdivision in Texas, or Arizona, or Georgia. You see rows of beautiful brand new houses, sparkling kitchens, 2-car garages. You call the agent to ask for the price. And they tell you, sorry, these aren't for sale. These are for rent. Entire neighborhoods, built exclusively for corporate rental income. Chars, who owns them? A faceless corporation. This is modern feudalism. In the Middle Ages, the lord owned the land, and the serf worked the land and paid rent. In 2025, the hedge fund owns the house, and you work the job to pay the rent. They have realized that a generation of people priced out of ownership creates a permanent class of renters, a guaranteed, monthly revenue stream, high yield, low risk. And here is the terrifying part. They have deeper pockets than you. When a regular house does come on the market, you need a bank approval. You need an inspection. You need 30 days to close. The corporation, they make an all-cash offer. No inspection. Close in 5 days. Who do you think the seller chooses? You are bringing a knife to a nuclear war. But wait, there is more. Let's say you do beat the odds. You save enough money. You find a house. You buy it. You think you are safe. You think you own it. Wrong. Enter the silent killer of 2025. Insurance and property taxes. Look at Florida. Look at California. Look at the Midwest. Insurance premiums are skyrocketing. In some places, they have doubled or tripled in just 2 years. Why? Climate risk? Repair costs? Litigation scams? Yes, all of the above. But the result is an uninsurable asset. If you have a mortgage, you must have insurance. It is the law. If you can't find insurance, or if the premium goes from $2,000 to $10,000 a year, shown, you are in default. We are seeing a wave of forced selling. People who paid off their mortgage decades ago, retirees living on a fixed income, are being forced to sell their homes because they can't afford the monthly insurance bill. And when they sell, who buys? The corporation. That self-insures. They absorb the cost, they raise the rent, and the cycle continues. This is why searches for how to lower home insurance are trending right now. People are desperate. They are searching for a lifeline. But the water is rising fast. This brings us to the Great Divide. The economy of 2025 is bifurcated. That is a fancy financial word for split in two. On one side, you have the asset owners, the boomers, the wealthy investors, the corporations. They are doing fine. Their home values are up. Their stock portfolios are hitting record highs. They are searching for high-yield savings accounts to park their extra cash at 5% interest. They are searching for luxury travel and tax loopholes. On the other side, you have everyone else, the assetless, Gen Z, millennials, the working class. For this group, the economy is a disaster. Savings are gone. Credit card debt is at a record high. Searches for debt consolidation and pawn shops are spiking. This group is shifting to defensive spending. They aren't looking to get rich. They are looking to survive. They are searching for side hustles, gig economy taxes, and affordable rent. The housing market? It is the physical manifestation of this divide. It is the wall that separates the haves from the have-nots. And the ladder that used to let you climb over that wall has been pulled up and burned. It is not just financial. It is psychological, Ace. The media plays a huge role in this trap. If eats at you every day, you see headlines. Housing market crash coming, rates to drop next month. They keep you in a state of hopeful paralysis. You wait. And you wait. You think, I'll just buy when the crash happens. I'll just buy when rates hit 4%. But what if they don't? What if this is the new normal? What if the crash already happened, but it was a crash upwards? By waiting, you might be playing right into their hands. While you wait, rents go up. While you wait, the corporations buy more inventory. While you wait, your cash loses value to inflation. As Robert Kiyosaki says, savers are losers. In a high inflation environment, holding cash while waiting for a deflationary crash is like holding an ice cube in an oven and it melts while you watch. So, is it hopeless? Should you just give up, rent a pod, and eat bugs? No. But you need to wake up. You need to stop playing by the rules of 1990. The 30-year fixed mortgage on a white picket fence might be dead for now. But there are other ways. First, understand commercial intent. You need to think like an investor, not a consumer. Stop looking for a dream home. Look for a deal. Look for distressed properties. Look for areas where the insurance crisis hasn't hit yet. Look at multi-family homes, where you can live in one unit and rent the other. You have to become the landlord. Otherwise, you will remain the serf. Second, defensive finance. If you can't buy right now, you must protect your capital. Don't leave your money in a checking account, earning 0.01%. The banks are making billions off your deposit. Move it to a high-yield savings account. Get that 4.5% or 5% APY. Fight inflation with yield. Search for Best HISA Rates 2025. Do your research. Third, increase your income. I know, easier said than done. But in a K-shaped recovery, you cannot save your way to a house. You have to earn your way there. The search trends show high demand for B2B skills, AI tools, and enterprise tech. Learn the skills that the corporations pay for. Take their money and use it to buy your freedom. The 2025 housing market is a crime scene. The victim is the middle class. The weapon is interest rates and insurance. The suspect is institutional capital. And the motive is profit. They want a society of renters, dependent, vulnerable, controlled. You will own nothing, and you will be happy. That was the prediction. In 2025, the first half of that sentence has come true. But the question is, are you happy? I want to know the truth from you. Are you seeing these rent hikes in your city? Are you trapped in a mortgage you can't escape? Or have you given up on buying a home entirely? Scroll down and tell me your story in the comments. Let the world see the real data from real people. If you are angry, use that anger. Educate yourself. Protect your wealth. Don't fall into the trap. Hani. Read the fine print. Ihinya. Watch the data. Yaris. Follow the money. Because on this channel, we don't sell dreams. We settle the ledger.